So you're dreaming of becoming a profitable day trader. Well, let me just save you years of experience. Today, I'm going to share with you the 7 things that I wish I knew before I started day trading. These aren't your generic work hard and be disciplined bullshit. These are the practical, game-changing lessons that helped me make hundreds of thousands of dollars from trading. In fact, just last month, I made over $35,000. This is money that I could have only dreamed of when I first started. And honestly, none of it would have been possible without the things I'm about to share with you. I just wish I'd learned them sooner. It would have saved me so much money, time, and mental chaos. So the first thing I wish I knew before I started day trading is that the path has already been set. There exists a map with step-by-step instructions to take you from where you are right now to becoming a consistently profitable trader. And here's the crazy part. Most people either don't know about it or they just completely overlook it. And instead, they just wander around aimlessly, blindly searching for the perfect strategy that promises to solve all their problems. And honestly, this is exactly what I used to do, so I do completely get it. I thought all I needed was the perfect strategy. I'd spend all my time hunting for the system that would turn me instantly into a successful trader. And every time it didn't work, I just move on to the next one. It was like being on a treasure hunt. Only the issue was I had no idea what the treasure even was, let alone how to find it. Now, here's the truth. The treasure does exist. There is a proven way to become consistently profitable. And it's the same process that every successful trader to ever have lived has used and what I eventually stumbled upon. But if you don't know where to look, or how to get there, you'll keep running around in circles, bouncing from one strategy to the next, hoping that you eventually crack the code. And I'll be honest, I did this for way too long. I wasted months jumping from one thing to the next, thinking that each new strategy would give me the answer. But eventually, I had to face the uncomfortable truth. Maybe the problem wasn't the strategy. And here's the thing that nobody tells you. Strategy alone won't fix your problems. Trading isn't about just having a strategy and then you're done. Let me put it this way. If Elon Musk handed you the plan to build a rocket, do you think that you could do it? Probably not. Because it's not just about having the strategy. It's about knowing how to execute every single step of the process. Trading is no different. Without the right tools, mindset, and most importantly, process, even the best strategy in the world won't help you. When I eventually stumbled upon this proven system, it was my light bulb moment. Something clicked from that day. And from that moment, I had a real plan that I could follow and actually get the results I was looking for in a proven and systematic way. This entire process is just too long to cover in this one video, but I do have another video breaking down that entire system step by step. So what I'll do is I'll link it below this video so you can go and watch it when you're done with this one. Now, the second thing I wish I knew earlier was to play the AUM game, which is basically focusing on assets under management more than return on investment. Now, in simpler terms, the percentage that you make each month is not nearly as important as the amount of money you make that percentage on. 10% of $10,000 is $1,000. 10% on $1 million is $100,000. The same 10%. Now, to make $1 million from $10,000 would require a 10,000% return. A return that even the best traders in the world are unlikely to get in an entire lifetime. You need to understand that the S&P 500, one of the greatest and most consistent assets in the world, has an average yearly return of 8%. Now, as a trader, it is absolutely possible to average 8% a month. Yes, a month. And my main system returned me personally over 80% in 2024. But the main point here is that so many traders are fixated on getting the highest percentage that they possibly can. They want to win every trade or double their accounts every month. And then they start running wild with their calculations. If I could just make 20% a month on a $100,000 prop firm, that's $20,000 a month. I'd be so rich. Now, I know this because I used to be that person. When I started trading, I'd sit there crunching numbers thinking, if I make 10% a day, every day, and compound it, I'll make $1 bajillion in 5 years. And it's a fun exercise, but it's also completely unrealistic. I'd see traders online posting these insane 1 to 20 risk to reward trades and think, that's the expectation. I mean, if I can get a $100,000 prop firm account and make 50% a month, but let me tell you, that is not only unrealistic, it's almost impossible to sustain. I can see straight through these traders now and understand that actually they just want to sell you a course. Now, I'm not against selling courses. I mean, I teach people myself, but I am against setting unrealistic expectations because they set others up for failure. It wasn't until later that I realized it isn't about chasing high percentages. It's about scaling the amount of money that you're actually trading. Instead of trying to make 50% on a $100,000 account, it's far easier to manage $1 million account and return 5% a month. It's the same $50,000, but one is actually very possible and the other is just a complete delusion. Now, for many of you, even just $10,000 a month would be enough for you to quit your job, trade full-time, and focus on growing. So let's take a look at what's actually realistic and doable. Let's take a strategy that returns an average of 5% a month, which, by the way, is no means extraordinary. Now, let's minus 1% for the performance gap. This is accounting for things like mistakes and psychology. So let's take 4%, a very modest monthly average, very achievable. To make $10,000 a month, you would only need a $300,000 account making 4% a month. And now, for those of you who think that this is a huge number, getting $300,000 in funding, it isn't actually as difficult as you think. I mean, I've proven it myself. In less than 30 days, I secured over $200,000 in trading capital just to show my members how easy it can be. Now, the next thing that I wish I knew when I started was to think in probabilities. This would have helped me to accept the outcomes of individual trades are not actually that important. I used to be so fixated on winning every single trade. Each trade felt like it directly impacted my self-worth. If I won, I felt great. If I lost, I felt like a failure. And don't get me wrong, wanting to be good at trading is obviously natural, but having such a mindset can only be damaging. When I started, I thought that being a successful trader meant winning as many trades as possible. I eventually realized trading isn't about winning every trade. Trading is a game of probabilities. Let's break this down one step further. Let's say you have a 50% win rate, meaning you win half of the trades you take. And let's say your average risk to reward ratio is 1 to 3, meaning for every $1,000 you risk, you plan to make $3,000. You're going to be very profitable. And here's why. For every 10 trades, you win 5 and you lose 5. On the 5 losing trades, assuming you risk 1%, which is $1,000, you'd lose $5,000. On the 5 winning trades, you'd make $15,000. Now, take your earnings minus your losses, and you're left with a profit of $10,000. So with a 50% win rate, you're guaranteed to lose half of your trades. That's the only certainty in trading. So knowing that, it becomes pointless to stress over the outcome of each individual trade. Instead, you focus on clusters of 10, 20, 30 trades. So please understand, you're not going to win every trade, and that's normal. What matters is sticking to your strategy and letting the numbers take care of your profit. The fourth thing I wish I knew sooner is that trading psychology is useless if you don't have a profitable strategy. I mean, you hear it all the time. Trading is 90% psychology. And while psychology is important, it's just useless without a profitable strategy. You can think as positively as you want, read all the self-help books, and meditate for hours, but your results are gonna reflect the performance of your strategy, not your mindset. I see so many traders falling into this trap. They prioritize mindset over strategy development because, let's be honest, it is easier. Building a profitable strategy takes real work. You have to build, test, collect data, analyze, refine, and then validate it over time. And most people just don't even know where to start. Whereas it's a lot easier to read a book, or spend 30 minutes meditating, or go to the gym, or do an ice bath, all this traditional psychology BS. It feels productive because you think that psychology is 90% of successful trading because you heard it, but it's not going to get you the results. I personally fell into this trap early on in my trading journey. I created this incredibly strict lifestyle with some crazy 4-hour morning routine. I'd wake up early, meditate, journal, and do everything that the self-help world tells you that will make you successful. And whilst I did feel good about myself, my trading results just simply didn't improve because I wasn't putting the same effort into building a real edge. Eventually you realize good intentions don't lead to profit. I was spending hours on mindset when I should have been using that time to refine my strategy and improve my trading skills. The purpose of trading psychology is having the ability to follow your plan consistently and shorten your performance gap. This is the difference between your theoretical data of your system and the real world results of you trading your system. The next thing I want to share is that when you first start trading, it's easy to fall into the trap of thinking that success comes from mastering every strategy or every indicator or every method that there is out there. There's so much noise, so many ways to trade, and you think the more you know, the better you'll be. And now, while it's good to get a well-rounded understanding of the market in the beginning, trying to keep up with everything will only hold you back. Eventually, you have to cut the fat. You have to remove everything that no longer serves you and focus on the 20% of things that get you the 80% of results. Yes, there's more than one way to trade. There's more than one way to skin a cat, as they say. But here's the thing, you can only skin each cat one way at a time. Trying to do too much at once will just end up spreading you too thin and ruining your progress. Instead, focus on the concepts that make the most sense to you. When you simplify your approach, you'll start to see clarity where there was once chaos. This point leads me directly to the sick thing I wish I knew sooner, and that is that smart money is superior. You see, the markets are not random. They're heavily manipulated and controlled by the actions of institutional traders, or what we call smart money. These are the hedge funds, banks, and major players who have the power to move the markets. And if you want to succeed as a trader, you need to be able to understand how they operate. For most retail traders, they're so focused on surface level patterns or indicators, trying to predict the market based on what they see. But here's the truth. Retail traders don't move the market. Smart money does. These patterns and indicators show you what has already happened. The reality is, if it's already happened, you are too late. You cannot hope to win the game of trading by joining the party once it's already over. You have to be able to see the moves before they happen, not after. And this is why being able to read the market through the eyes of smart money is crucial to consistency in trading. If you're ignoring how smart money operates, you're essentially trading blind. You're just reacting to what's already happened, not anticipating where the market is going next. Smart money isn't chasing trends or trading based on emotions. They're building positions, creating liquidity, and engineering moves that benefit them. They leave behind clues in the form of price action, but you have to know how to read them. Once I started focusing on smart money, everything changed. I stopped using lagging indicators or random price action patterns, and instead, I began studying price action, liquidity, institutional order flow. This is really understanding the institutional behavior. I learned to anticipate market moves before they happened instead of just blindly reacting to them. By aligning my system with the actions of smart money, I became so much more confident and consistent in my trading. Instead of feeling like I was always guessing or trading with a level of uncertainty, I felt like I was trading with a clear understanding of what's actually happening. And then as a result, I lost less and won more, and my overall profitability skyrocketed. So if you're still trading like a retail trader, it's time to make the shift. Start studying how smart money operates, learn to read the clues that they leave behind, and build your strategy around their actions. Because in this game, smart money is king. And if you're trading in alignment with them, you're setting yourself up for success. The final thing I wish I knew before I started my day trading journey is this. When I first started trading, I didn't realize it, but I was actually gambling. And if you're being honest with yourself, you've probably been here too. And in fact, many of you are probably here right now without even knowing it. Every trade that you take that is not because of a trading strategy that has been proven to be profitable over hundreds of previous trades is a gamble. You are risking money without having any idea on the likelihood that you will be successful. If we take a look back to understanding that trading is a game of probabilities, to be a trader, you need probabilities in your favor. We know that 90% of traders lose money, just like 90% of gamblers lose money, because they do the same thing. They risk their money and then hope they win. Now, I hate to break it to you, but hoping is not a reliable strategy that will make you money long term. When I had this realization, it was pretty embarrassing, but I didn't know any better. I thought that I was being a trader, doing everything that traders do. But actually, I was just gambling. The shift here happens when you realize that trading is not about luck, it's about probabilities. It's not about hoping or guessing. It's about executing with a plan and discipline. This is what separates traders from gamblers. A trader approaches the market like a professional, clear edge, defined system, and a focus on long-term consistency. A gambler turns up to the market, thinks they see something, places a trade, and then hopes to God that that trade makes them money. This mindset shift was a game changer for me. Once I stopped gambling and figured out how to trade, everything became more structured, more predictable, and ultimately more profitable. So those are the things I wish I would have known sooner. And hopefully those things can shave off years of your journey and make becoming profitable so much easier. Now, as always, I'm with you every step of the way.